Welcome to the Dividend Talk podcast, episode number 27, the ultimate dividend stock to buy our kids this Christmas. Hey guys, welcome back to another episode of Dividend Talk. I'm your co-host, Engineer My Freedom, and today I'm joined with European eDGI. This is a podcast where we discuss our passion for dividend growth investing with our own unique European flavour. If you're new to this channel, please hit the like button and subscribe to us, and check out our previous episodes on YouTube and Spotify. See you on the inside. Welcome back, everybody. I'm in holiday mode. Christmas is around the corner. Officially finished work, and I'm excited for this. I'm joined here with European eDGI. How are you doing?
Also, same here. Still have a little bit of work to do, but I'm really excited because indeed, almost 2 weeks, no work soon. Just family, kids, and maybe a little bit work on my dividend portfolio. But that's it. I will totally switch off. So I'm really looking forward for that. And secondly, we have a nice full packed agenda today. So I'm really looking forward.
We actually have a very busy week coming up, don't we? We're going to record another podcast on Wednesday, but we're also planning on having a Dividend Day next Sunday. This is where we usually just meet up with members of the community on Teams or on chat, and we just chat about dividends and stock markets and stuff. So we've done this a couple of times and we've had a few people, but if you'd like to join, just get in contact with either of us and we'd love to have you. But I think it'd be a nice break over Christmas just to get together with everyone and just chat. What do you think?
Yeah, definitely. It's usually a good combination, right? Dividends, beer, and fun. So I think, everyone who would like to join, just reach out to us. It will be on Sunday at 8 p.m. Central European time. So I think it's 7 p.m. in Ireland and the UK.
Yeah, awesome. Can't wait. So what's been going on in your world? Is there any news to report on your side?
Oh yeah, definitely. I actually did a post this week about Philips. I did an analysis of the stock. And this week they also announced that they will acquire biotelemetry for 2.3 billion euro. And I find this a really interesting one. This acquisition, first of all, I think they pay really a shitload of money for this because I believe they only made 400 million in revenue. I think they are hardly profitable. But when I started diving into the company, I felt like, yeah, this is really a smart move because what COVID-19 has told a lot of big pharma is that clinical trials, as how they are being done so far, are really outdated and antiquated because it's a lot of paper processing there. And this company is really on the telematics, telehealth space. And they have what they have is they have a device, for instance, one of their products is a heart monitoring system, which can last for 30 days. And it automatically gives a signal when there is a non-normal half rhythm going on, and then it gives a signal to your mobile, and that signal goes further on to the doctor, and then they can straight away intervene if needed. And this is like modern day technology for 2020, but you will be surprised that this is actually not so common still for many people with heart issues. And I think this is a really good play for Philips into their portfolio going forward. And they think that after 5 years that the company will really be profitable in the sense of that it starts to earn its money based on the acquisition. So I think Philips realizes that they pay at the top of a market for this, but I think for them this is really a long-term play, and I think it's a quite clever acquisition for their portfolio. Just not sure whether the value is really but we'll see over time, let's say.
Yeah, it makes sense that like something like that. I can't believe it's not more widespread. As you said, it's 2020. The technology has been there. We've got phones. My iPhone or Android phone can tell me if my heart is beating too high, and you can get an alert. So I'm surprised it's taken so long for this kind of technology to get out more mainstream. But it's a really smart. I know they're overpaying, but I think it's the right time for them to get into something like this.
Well, I think it's probably because you say mainstream here, right? And your heart rate monitor. I mean, you couldn't be really bothered if it's working or not from that point of view. But if you're a patient, come on, you better make sure it works, right?
Yeah.
So there's much more regulation around this to get it approved as well. So and this takes time, but this also means that maybe some companies are more risk averse to stepping into this, and it also requires the whole supply chain to cooperate where the incentives are not aligned. So I think that's one of the reasons why you say that the adoption of such kind of technology is a little bit lagging compared to other industries. But I think COVID-19 has shown that they need to catch up, just the healthcare industry, because of remote patient engagement at the moment. So, yeah.
And while we're on technology and sending your information like data and stuff, I'm a little bit behind. I came across this Fire Eye was hacked. I think it was hacked 2 weeks ago. I've only read about it this week. And for me, it's kind of scary. In one way, you can send data across to your doctor, but anything can be hacked. And this has been shown that, like, the United States was hacked. They believe it's by a state-sponsored party that's done it, but they've hacked some tools from the FBI. So when you're sending data across, I'd imagine security is going to be really, really important, especially for patients and stuff. Surely it has to come into your mind somehow. I mean,
yes, but what really triggers my mind is this Dutch guy that also hacked Trump's Twitter account, as he claims, and he said that the password was MAGA 2020 attention mark.
That doesn't surprise me, and I'd say Trump would probably even give him the password.
Yeah, exactly. Yeah, via hashtag without knowing it.
Yeah, yeah, but yeah, no, I get your point. From all the regulations and security and sending data, it's a scary world out there. And as I said, this sponsored or alleged sponsor attack is kind of an eye opener in that regard. I mean, if you can manipulate someone's data, it might not affect me and you. We're just common people on the ground. But if you're sending someone's heart condition that's in a high ranking position, for example, that can be manipulated. So yeah, I get it. The regulation is huge, but it's scary that an attack on the FBI can be carried out and apparently successful as well.
Yeah. Usually the thought that I get in my head is like, okay, so imagine that someone would now go to my bank account or to my brokerage and would wipe out all my wealth. How would I feel? Yeah. So then I automatically go to the question, should I have some gold, like physical gold? And I don't know if others have that as well. Maybe that's more rather a question also to the listeners.
Mm-hmm.
But sometimes this doomsday scenario comes into my head, and then I feel like maybe I should have some physical gold, like locked up in my hidden in my garden or something like that. But so far, never did it.
You're on Twitter, right? Do you not own Bitcoin? That's the new gold.
Yeah. No. Yeah. Maybe because I can't dig a hole in my garden and put Bitcoins in there. Maybe it's just that. Yeah.
Cool. So you have something on Unilever, I believe, have you?
Yeah, I just found it interesting that Unilever started to buy advertisements again on Facebook. So, and the run up to the elections, many huge companies like Unilever, Coca-Cola, and such, they started banning Facebook from their advertising spends. And now that Biden has won, they returned again. And there was also in the news item was also mentioned that they really work together with Facebook on this to address their concerns. And for me, this is always a difficult topic because, for instance, from the progressive side, this is a good thing to do because, diversity, inclusion, But from a conservative side, it's always like, look how these companies are dominating the information that we see and which we are allowed to see. So I find this always a really interesting case to look at it. And Unilever was really early with this statement to pull back their money. Now they started putting it in again. So I'm wondering if this will have any positive influence to the Facebook share price. And I own some Facebook in my 10% non-dividend stock portfolio.
Yeah, I remember you speaking about this when it happened, and I believe Unilever were the first company, or
Yeah.
at least one of the first
Yeah.
companies to pull. So it's interesting that they are now one of the first to go back. So
Oh, they're not the
see,
first. I think Coca-Cola went 2 or 3 weeks ago.
okay,
But just it's interesting for me to see it all, because there's still a lot of misinformation going on everywhere around COVID-19 and such. So yeah. Yeah. Anyway, I found it interesting. It caught my attention again.
cool. Okay, will we move on to the main topic?
Yeah, definitely.
Yeah, we decided this week to try and give it a little bit of a Christmas theme, because it's Christmas in 6 days. So we decided to, I don't know, what would we buy our kids for Christmas? And this is something for me that it's kind of interesting for me, because, as you know, my son is interested in this. So I thought, who better to ask than him? What would he buy, and how would he pick? So I remember when I was starting with him, I had a few goals in my head. I don't want to force it on him, first of all. So how do you get him to be interested in it? So first of all, I think it should be a brand that the kids know and instantly recognize. If they know the company, if they're involved in the company, it's a lot easier for them to get excited about the company. So if it's a brand that they understand, if they know what they do, that resonates with the kid. And I think that's really, really important. I mean, there's no point in me throwing Procter and Gamble at him. He'll haven't a clue what they do or why they do it. So for me, that was important. It's not so much the first stock. It's not so much about how they're going to do in 30 years' time. I just want them to get excited and to start building an interest in investing. So that's kind of where I went with it. From my point of view, then, strong growth shown in the past is key, and good future potential. Might not necessarily be good in the next 2 years, but 10 years, I want to go. A strong balance sheet for me is good as well, because if they don't have a strong balance sheet, they might never be around. And I know we said ultimate dividend stock, but do you know what? Dividends was not essential for me when picking the stock for my kids. It just turned out that he picked dividend stocks himself, but it wasn't actually important for me. So I'll give you the 3 companies that he picked, and I'll give you his rationale behind it as well, actually, because I think it's quite interesting from a kid's perspective what he was thinking. So he mentioned Disney, Microsoft, and McDonald's. Okay, three very good companies, and you can see why a 10-year-old would pick those 3 companies. Disney's on our TV screens. They have parks, your Disney. Microsoft with the Xbox. He doesn't know anything else other than the Xbox and obviously PCs. And McDonald's, man, we drive past 3 McDonald's every single day. So they were the 3 he's picked, and his rationale behind them was he would not pick Disney as his number 1 pick at the moment, because the parks are closed. So you see, his focus was the parks, not the Disney Plus, right? And so that's what he knows. He said Microsoft is a good company, but he prefers the PlayStation. So Sony. And he said McDonald's makes kids happy and always has long queues when we pass. And you know what? I thought that was quite a smart decision from him, even though I don't agree with McDonald's whatsoever. And I suppose the only reason McDonald's for me would be in jeopardy is their debt is kind of growing. So their dividends might not be safe, but at the same time, I'm thinking for a kid, dividend is not essential. So I can understand. If I was to choose any of those 3 companies, it'd be Microsoft. I think it's a great company for a kid. Strong balance sheet, instantly recognizable brand, strong growth past, and strong future growth.
That's really, really cool. And how is it? My kid has something similar, right? So I asked him one time also to make a list, to make a pie in Trading 212. You know what was on there? Disney, Microsoft. So Disney because of Star Wars, Microsoft because of Minecraft, and McDonald's, he wasn't sure, actually. He said, Father, you're on a vegan diet, and who wants to eat so much meat? So he expects less people. But he had Netflix on there. He had Facebook on there. He had YouTube on there. I said, well, let's make it Google. He said, no, because Google, I want for Google search. I said, yeah, but it's the same. So I had to explain him also what the difference is between a product and a company. And it's really insightful for those kids.
But isn't it amazing to see that they cling to what they know about these and they see Minecraft. All my friends play Minecraft, therefore
Yeah,
Microsoft must be good. And I
yeah,
think we can learn from that as investors a little bit as well. Stick to what you know, and you might not go too
yeah.
far wrong.
Yeah, I think as well. And at least you have a feeling for the company and their future prospect. But for me, actually, it's also good validation that my kid is thinking about those stocks. It means that probably there is some future ahead of those companies because the next generation will be familiar with their brand and probably have some brand loyalty there.
There is a company called Roblox. I don't know if your kids play it, but my kids play it religiously. And I
Yeah,
believe they have an IPO. Did the IPO come out? But I said to myself at the time, it might be one I might watch. I don't usually get involved with IPOs,
yeah,
but just to get them some shares in it, because it just keeps them
yeah.
interested.
Yeah, I think
Um,
Roblox was the one that pulled back from the IPO after we saw these crazy numbers where stocks were shooting up 150% on a day.
yeah, I believe it was. I can't remember off the top of my head, but when it does come around, I'm going to keep an eye on it just for him.
Cool. So that's really nice. And he wants 3 stocks so under the Christmas tree. So I assume you're going to buy some fractional shares.
He actually has here, and I didn't see this until before I came into my little office here to record this. He has his goals wrote out for next year, right? And this is so cool. And on it, he has €500 into investing, €500 into Gym Tribe, which is our online business we have together, and €500 into charity. He wrote this all by himself. It's here on his little. He has his own PC over there.
Uh-huh.
That's incredible. Like I haven't seen. I only seen this now, but gives me great hope. It really does.
When I was 10, I think I was watching at the ceiling where I put a poster of Marco van Basten on the ceiling so that if I would wake up, I would open my eyes, I wouldn't see white paint, but I would see straight away Marco van Basten.
Yeah,
That's what I did when I was 10.
I was the same. I slept with my football. It came everywhere with me. So
Yeah, I think they have it from their parents, probably.
I hope so.
So maybe then let me share also my stock pick. And actually, there's a little bit of a twist to it because I chose Facebook. And so it's not maybe a pure dividend stock at the moment. But why did I choose it? I strongly believe that Facebook will start paying a dividend in the upcoming years. Maybe not now or next year, but in the upcoming years. And I think it will follow a path probably like Starbucks, Microsoft at the time as well, where the more mature tech, semi-tech companies at a certain moment will not find their organic growth anymore that rapidly, and therefore start in return to reward shareholders more. So I looked it up what their official dividend policy is, because I remember back in 2017 they said like we don't aim to pay a dividend now, but we might in the future. At the moment, they say we do not intend to pay cash dividends for the foreseeable future as well. So there's nothing announced by Facebook that gives me a feeling from that written statements that they will do it. Yeah, and they say foreseeable future, so I don't know what that means for them. What I did find interesting is that on CNBC, the co-founder of the Harvard, Facebook or something like that, so the forerunner of Facebook, mentioned that he thinks that they will start paying a dividend anytime soon. But then I looked up this guy, and he's a scam because he was also the one that settled on $65 million or something like that with the other two brothers on I said suing Mark Zuckerberg for stealing their ID.
Mm-hmm.
But this company is so cash rich. So they have, what is it, around 55 billion in cash and short term investments. This is 40% of their total balance sheet. They have also, how is it, been doing share buybacks lately to start rewarding, how is it, shareholders. And this was also for me one of those signs. Like, why did they start paying buybacks for me? It means like the capital allocation process in a mature company is kicking in. I did do some math though. I think what people need to know that if they buy back 10 billions of shares on a market cap of what it is at almost 800, that don't count yourself rich, that you will get I said enough I said lowering share count, so the EPS will go up, because half of that is just being I said allocated to buying back shares that are part of employee stock compensation plans. So it's probably good to do. So there you won't see a lot of decline in share count. But just to go through it, their profit numbers at the moment. So they make almost $9 in earnings per share, trading 12 months. A PE around 31. It's a high growth company still. So if you go to Morningstar and you look up their 10-year track record, it's amazing how they went from $1 billion to like 20 billion in profits. It's really, really amazing. I also looked at their cash flows. The free cash flow is around $7 per share. And they have an annual free cash flow of around 20 billion per year. This is really, really massively. So half of that is currently being used for share buybacks. So they still have the other half that goes directly into the retained earnings. I also did some back on a napkin calculations. So if they would, for instance, pay out now, start paying a dividend, and let's assume they would do 50% of their cash flow, it would be $3.50. So it will be a yield of slightly more than 1%. But I think for my child, who's now less than 10 still, I'm thinking here about giving him a share that he will be proud on as a dividend stock when he's 18. So I'm thinking about, will Facebook pay a dividend 8 years from now? And I think they will, from that point of view. And they don't have any long-term debt, nothing at all. They have 32 billion in liabilities, and these are the typical liabilities that you see on a balance sheet, like accounts payable, these kinds of things, some short-term liabilities, some capital lease. But their equity is 100 billion in the company, of which 55 is just retained earnings. I mean, this company is so cash rich, and then the nice thing about it is they're under scrutiny by the government. The trading commission sued them. They want them to split up. So I mean, they cannot do a lot with their cash. I mean, they cannot buy TikTok now. I'm sure they will be blocked from that. So they don't have a lot of options other than R&D spending. And I mean, how many billion in R&D do you want to spend on tech, which with potential no return on some of those things? Think about their what is it? Is the HoloLens? No, the HoloLens is Microsoft. What's the other one from Facebook? The virtual reality. So they might be really big in that, but you're not. I may hope that they're not going to spend another 10 billion per year on that. So I think there's a high likelihood for dividends. I would expect a little bit, maybe the profit growth to slow down in that case. But here again, also I shared the other day about having how do you see that the companies really are making money, and that's when the return on invested capital is higher than the cost of capital. And they have a ROIC of 21 versus a cost of capital of 9%. So this is just a cash generating machine, which in my opinion is unstoppable. And if you don't believe me, just think about the last 2 years of what they had to face with the data breach, with the hearings, now with the breakup. Share price doubled, rightly so. Yeah, because otherwise you would have the company now the 15 PE, which is insane in this bull market. But under all those pressure, the company is still massively growing sales plus profits, and with a profit margin of almost 80% or something like this. So imagine if this pressure falls off and they start getting an open sea again. I mean, for me, it's both a growth story and a potential dividend candidate 8 years from now. Long story.
It's the one stock that I wish I bought back in March when prices went. It's the one that got away from me. I suppose it's not a dividend stock, so it was never on my radar. But over the last couple of weeks, it's been popping up everywhere. I'm reading lots of posts on Seeking Alpha and Twitter and places that I normally read, and lots of people recommend them. And someone pointed out to me, when you think of Facebook, you think of the Facebook app, right? But what are the top apps you use on your phone at the moment? For me, Facebook, but not so much, Instagram and WhatsApp. They
Yes,
own all
exactly.
of those. So,
Yeah.
so it's not just Facebook anymore. You have Instagram, you have WhatsApp, and they're just a huge company. And as you said, how they've grown their revenue has been incredible. I really feel I've missed the gun on this one. And it's like, it reminds me of Visa. They always look expensive to me. But then if they keep growing, then why does that matter? I need to get over that kind of psychological edge. But I agree with you. It's a great stock for the kid. I think it's a great stock for him.
Yeah, and I looked actually some of the valuation metrics. I looked them up today, and I think Google is even less priced compared to the multiples. So the one reason why I didn't choose Google is that I see Google already for 20 years playing around with all their moonshots, literally shooting things to the moon almost. And I don't see the same kind of respect for shareholders as Facebook has. Hence, with Google, I don't know where it's going towards to. But yeah, I own one Google share as well. I might buy one time a second Google share, but from a dividend point of view, I have no clue where that is going to. And with Facebook, I can at least envision it.
Good. So we've given you 4 companies. I'd love to hear from other people what they would think, especially those with kids. What would you recommend for your kids? And I'm sure we can pass these comments on to our own kids and see what they think of it.
Exactly.
Okay, we have a few questions this week. We might get started on them. Our first one is from Phil, as always. He likes to get in early. And he asked us this week, how much time do you normally spend before making an investment decision?
So, and I think he's interested, like, to learn, like, how long it takes before we don't doubt anymore, right? So let's say like that. For me, no longer than a month. I give myself usually a week the time to study the company. If I like it, I usually initiate a position. What means for me initiating a position is maximum, now depending on the tier, of course, but maximum 5% to 6-7% of the total position. And this is just a position then to satisfy my urge. By having studied the company, usually I want to buy it straight away. But at the same time, it also allows me to dip in the toes a little bit. So my urge is satisfied. And then after that, I go more into, I said, observing the stock. And that's something that works for me. So usually no longer than a week. Sometimes it takes up to a month to go through it. But I'm usually reading the highlights of the last 2 annual reports. I'm doing my analysis, my calculations. But then if, for instance, a company would really go down or something like that, I would go into full analysis mode really rapidly. I don't need to start from scratch anymore, because then is the question, like, do I want to load up or not? And that's a total different question. And for that, I want to be better prepared. But this observation period before usually helps me to be convinced already quite a bit.
This is one of the reasons that I really benefit from your fundamental analysis template that I use when I'm writing my own stock reports and stuff, because it really forces me to, one, be objective, because sometimes you have a preconceived good or bad idea going in, and sometimes that bias plays when you're making up your own decision. But also it cut down, I wouldn't say the amount of doubt, but it cut down the amount of time it took me to actually make that decision. So once I complete that usually takes, depending on how busy I am, but it might take 1 to 2 weeks. And if I get if I'm happy with that, if it's in a range above 80 to 100, I'm happy with that decision. And like you, I'll initiate a position pretty much straight away off the back of that. I won't load up and go all in. Like you still need to assess it, but that has really taken the doubt from me and helped me get over that little hurdle of spending too much time in reading and read. Like he says, you can go on to Seek and Alpha, you can go on to all these websites, and you'll always find articles to suit what you want to read. You always will, no matter what stock, whatever company, you'll always find something. So
Yeah.
that's why I really, really enjoy that process. It's meticulous and it just goes through each step. And once I get the number at the end, I know if I'm happy or not, and I'm happy to buy at that stage.
Cool. Nice question, Phil. Thanks, like always. And then maybe the next one for you also, EMF from Dividend Dane. Do you have any views on geographic allocation, US, Europe, Asia, not to forget Oceania, or emerging markets or something like that?
I used to have a lot more mass on this, but a lot of the companies that I invest in at the moment are probably spread across lots of different regions. They have they have areas in emerging markets, they have areas in Australia. So the only real two that I'm focused on is US and Europe. I started out in the US because every book you read is US stocks, and that's where you start. I want to shore up my European portfolio, I mean, from currency point of view and so on. But they're the only real two. I focus on companies that are diversified. So you have Coca-Cola, all these kind that they're all over. So I believe there's diversification in geographical allocation within each company.
Yeah, same here.
Cool. Okay, and we have one from, I'm going to say Peter. Probably not pronouncing that right, but forgive my accent. And I think this one's for you. He said, how do you allocate different currencies and how do you mitigate currency risk? Especially because Poland and with US and Europe and so on.
Yeah, and he lives also in Poland. So what he's actually saying is like, we don't only have a euro versus dollar currency risk, but we have also, we rather have the Poland versus euro and the Poland versus the dollar. And that's sometimes not even the same. And then let's also straight away take Letters Compound's question in here, because he has a similar question. So I take the philosophy of trading in euros, not so much in zlotys, for a few reasons. First of all, I could imagine that once living off my dividends, I would be in a euro-based country, like for instance in Spain, half of the year or something like that. So I would expect my income to be in euros. Secondly, I come from the Netherlands, so I'm more familiar with the euro. Thirdly, Poland maybe one day will also join the eurozone. I think not for now. They had some intentions before, but still to the point. From both, I stopped thinking about that, other than more like from an allocation strategy. So I prefer to have at least 35% of my portfolio in euros as a diversification away from the US dollar. I don't need it all in. I can't really choose Polish zloty because it means I would need to invest in the Polish stock market, and there's really nothing I like there that suits my investing style. So from this allocation, I know that if the euro goes up or the euro goes down, or it kind of keeps itself a little bit in balance. But I started investing back in 2000, was it 14 or 15, when the US dollar was on 160 to the euro. Yeah, and now it went from 160 in a long path all the way to 17. Now it came back to 122, and I've been every month just deploying money in the stock market. So I just stopped worrying about it. I don't believe USD will be America will be the next Argentina. So I feel quite comfortable with that. I don't expect hyperinflation in both of the currencies. So there's not, I don't have influence on the currency. So there's nothing I can do. I can just dollar cost average is my only mitigation.
Yeah, I was asked this question on Twitter because I have both. I have British American tobacco in ADR, and I've got Royal Dutch Shell on the Amsterdam Exchange. And I was asked why those, and why not buy them on the London Stock Exchange. And the reason was I just wanted to have the two currencies. I want to have US dollar and euro. I don't want to bring the pound in. I don't want to bring anything else in. I'm not too worried about it at the moment. Look, it goes up and down, and maybe I'll worry about it and might try and mitigate it as I get closer to retirement. But at the moment, I'm just focused on US and Europe, and I'm happy, as you said, just dollar cost average and hope it evens itself out over time.
Good. So maybe let's also go then to the next question from Let Us Compound. How long do you have patience with a stock? For example, a company with strong and growing profits, but for some reason the stock price doesn't follow.
I mean, look, that doesn't bother me in the slightest. And I've seen this with T and AT&T a lot on Twitter lately. And a lot of people, we warned about people getting involved in them at the start because people are just buying for the high dividend yield. But we know the stock price is not going anywhere. And I've seen people get frustrated lately because of that. That doesn't bother me. The huge debt levels bother me, but the stock price does not bother me. So for me, I don't mind stock price. I have no patience with a stock if my thesis change, such as a dividend cut, and then I'll sell it. But other than that, I'm okay. I'm okay with it. The stock price doesn't have to go anywhere for me.
And this is maybe the difference because I think Let Us Compound is also more of a value investor. And then you start to think about opportunity costs. Yeah, what if you would have invested in another stock at the same time? So if I think about value investing, I want my thesis always to play out within a year. Yeah, and this is, for instance, for me, Danone. If Danone doesn't prove that by Q2 next year it got a trend back up, then usually I think it's time to cut your investment there and to start looking elsewhere. And of course, in my case, then the next day it would always like pop up 10%. That's the fortune I always have. But that's how I look at that. Usually, I give myself a year of a time horizon to see the thesis play out.
Yeah, I mean, would that change in a bear market? You'd have to give it some extra time if everything is going down.
Yeah, but the bear, yes, of course. Yeah, to your point, yes. In the bear market, but then there are external factors that are pushing the price down. But then at least you would expect it still to outperform than the benchmarks, right? There.
Yeah. Cool question. Okay, and the next question is from East Set, and he asked, "What do you think about market timing?" I think he's a little bit unsure whether right now is the right time to start investing. Lots of people are predicting market crashes.
So I'm investing since 2014, and since 2014, I'm expecting a market crash within a year.
You only have to listen to some of my comments on the earlier podcasts. I mean, that's only 27 weeks ago, and I've said pretty much consistently I'm expecting a market crash, and it still hasn't happened. So no, I don't try and time the market. I just play away every single month, put the same money in.
But if you have, for instance, like let's say like that, you have 10,000 euros in savings now. Please don't put all the 10,000 straight away in, right? Just if depending on your risk profile, just even it out over 2 years. Why not? Yeah, just take 2 years at a time. Just divide the 10,000 by 24. You can do the math yourself because I can't. And then invest that every month in the stock market, plus the things that comes from saving your salary, and you're safe as much as you can.
Yeah. I mean, I always feel if you have to ask that question, maybe you're not ready, or maybe you're overextending yourself. So
yeah,
have a little think about your goals, and if you're unsure, by all means wait, but don't wait because you're expecting a market drop. Wait until you're comfortable with what you're investing in and why.
Oh, good advice.
Okay, we have a question then from Rafa, and he wanted to ask us if we have reviewed Logistal, ticker symbol LOG. It seems like a dividend growth stock, but they have very thin margins, and the 2020 free cash flow was very positive.
So I have not studied it. Yeah, reviewed for me means skimming some basic data. I get I get why he's asking it, but I will need to do more homework on this one, because from what I've seen, it's too complicated for me to give a quick answer, Rafa. So you owe this one for me. Generally, I don't like a thin margin business. I've burned my fingers on that with Koninklijke BAM in the past, a construction company in the Netherlands. Such thin margins don't leave really room for error.
Good. I haven't looked at them at all, so I've no comment on that. And the last question today is from Kurt, and this one will be more for you. And he asked, which techniques do you both use when to write a call or put on your shares?
So I don't know which technique he is referring to, so to say. But when I just write a call. No, I never write a call. I buy a call, or I write a put. That's the only two things I do. So I write a put when for instance, let's say like that. Ahold Delhaize, I want to own it really at 22.5 euro or 22 euro. I could write a put, let's say at 21 euro, a little bit below it, so that I need to buy 100 shares at that time. I expect a 90% of not getting to 21 euro. So I get the premium as a kind of an additional dividend. But if it gets there, I'll be still a happy guy, unless there was a fraud or something like that. But I would still be a happy guy to buy it at 21. At the same time, I sometimes buy calls, like I did with Shell at 11 euro. I knew I don't want to own more than another 100 or 200 shares now from Shell, because it's already quite a large position in my portfolio. But I do believe it might have a turnaround there. So I bought 2 calls on Shell. And those are the only 2 kinds of trades I make. In 80% of the cases, I write puts. I hardly do calls, or I need to have a really strong conviction.
Yeah, and you have a good blog post on that actually, so I'd recommend Kurt checking that out, where you explain those two strategies as well.
Yeah. So these were the questions again for this week. It really goes quick, the time, and again, good questions. And thanks to all of you for sticking with us already this year. So let's go to our last part, and it's a stock pick from you, EMF. So I'm curious to hear which stock you have chosen this week, and also why.
Cool. So this week I went all the way to Sweden for my stock pick. I have to give a shout out to Alan. He's active on one of our Twitter groups, and he helped me decide on this stock. But I've chosen Castellum. I hope I'm pronouncing that right, but they are a Swedish commercial REIT, REIT. So they have a really diversified portfolio in office and warehouse and public sector buildings. And the good news is, in the last quarter, they collected 99% of their rent. So they're quite strong. And you'd expect these kind of businesses to pay their rent on time. So I have no problem from them. But what kind of stood out for me is their business model. And they have a high mass on sustainable city. If you go onto their investor relations, it kind of smacks you in the face. Everything is green, and they keep talking about sustainable and how they're going to look towards a sustainable city, and everything they do seems to have climate change in mind, and it's really inspiring. And I spent an hour on it today, and I completely forgot to look over the numbers because I was just reading all their mission statements, and I just kind of got lost. But it was really inspired me, and a company that I want to do a real deep dive on, because I'd be really interested to see what their underlying figures are. But I suppose the main business model is that they invest in and develop commercial properties. They mainly invest in, but they do build and develop some. They say that their main focus is increasing their cash flow with the lowest amount of financial risk possible. That's what you kind of expect from a Swedish company or a company in that region. So for me, that's reassuring. I mean, they want to grow their buying companies, but they want to do it with lowest risk possible. Just to emphasize how big they are, they own over 600 companies in Sweden, Copenhagen, and Helsinki, which encompasses about 4.3 million square meters of office space. That's quite huge. They said that their strategy for growth is to refine and develop properties by investing in new construction, expansions, as well as making new acquisitions. So I really like them. It's really the sustainability that caught my eye. As from a dividend perspective, you just look at I'll post the dividend chart from 97. The growth is incredible. They increase every single year. And the last time they raised, it was 7%. They're paying roughly, I think it's 6 Swedish krona, I'm going to call it. So at the moment, which is roughly a yield of about 3.25%. And the current share price works out, if you did a currency change, of about €20 per share. But no, they're really promising, and they have a slide, and I'm going to share this, and it's about the sustainable city, and I found that really interesting. They're talking about what they want to do. They want to help the planet, they want to future-proof, and look after the well-being of the people within that city, and it's quite inspiring. So that's my stock pick of the week.
And what is really nice about this one, EMF, is that it's a real estate investment company.
Yeah, I was looking for another one to add to my portfolio because I have realty income. I really want one in Europe. I was looking at an Irish one, and it doesn't really work for me. So this one is definitely going to it trigger me. So I do want to have a little look over their history and see if it fits. But it certainly looks promising to me.
And what I like about this one is that it has a more reliable cash flow, because if you look at some of the other ones, for instance, the Dutch ones, they're heavily invested into retail, shopping malls and such. Yeah, so it's not a space where I feel comfortable with. I think Euro commercial or something like that. So for me, this is a really interesting one, actually. And I will definitely also want to do some more homework, because I still have a spot for a real estate investment trust in my in my portfolio, and I prefer one in the European zone based.
Yeah, the office space might worry me a little bit in terms of how we go forward, working from home, if that becomes the norm. But I mean, the fact they have warehouses and they have co-op spaces and public sector buildings, they're well diversified. So nice. I'm not overly worried about the offices on their own.
Cool. So it's not necessarily a stock recommendation, but more to inspire. That's what I understand.
Exactly. Yeah, and just trying to pick them from regions I would not normally look. I never even think of looking in Sweden or anything like that. So looks like a good place to start.
Super. Well, with that, we have ended our show again for today. So thank you. It was a pleasure again. I'm looking forward for Wednesday to do the last one before Christmas. Then we have another one coming up probably before the new year, I think.
Yeah.
So we have two more shows left this year, and Sunday next week, for everyone to remind, 8 p.m. Dividend Day. Just chatting. Take your favorite drink with you, whether it's a beer or a tequila or whatever it is. Join us. We will be just talking dividends. Usually it lasts around 2 to 3 hours. It's just some pub talk. So be invited.
Yeah, look forward to it. I can't wait. As I said, we've ran this a few times. It's great fun always. So I'm just deciding what drink to get this time.
So thanks all for listening, and see you next time.
See you next time.